Thank you, Mr. Chairman. I appreciate, Mr. Commissioner, for you being here today, and I'd like to cover a couple things that we've briefly discussed previously, and want to know under what specific statutory authority was the employer mandate penalty delayed?
I don't have the details on the legal analysis. The role of the IRS in that decision was to be consulted on the operational implications of this transitional relief period that the Treasury Department announced early in July.
And did the White House visit with you directly about that period?
No.
And so how did you find out about it?
It was a combination of two factors. One, the first step was that Treasury engaged IRS staff and consulted them on the administrative implications of a transitional relief period. And then I, in a subsequent meeting with the Treasury Department, learned that they were considering it. And again, the IRS footprint in this is what are the administrative implications?
In the follow-up to that, in the proposal, you talk about voluntarily complying. Obviously, the penalty has been suspended. The 4 in 2014 has been changed to 2015, but will there be any implications, particularly for small businesses, if they do not voluntarily comply?
No. And again, the definition of small business is one that we have to make sure that we're clear on, because if you have more than 50 FTE, then you have these employer reporting requirements and particular responsibilities. If you have smaller than 50 FTE, the situation for you as an employer is very different. But there will be no penalty. We encourage voluntary reporting, but no penalty for not reporting and no responsibility payment in the first year.
Will there be any implications in terms of your algorithms and in terms of selection for audit if folks do not voluntarily comply? You can guarantee that will not be part of the algorithm?
No, I will talk to the team about it and make sure, but there's no intent to do that at all.
Well, speaking of determining who receives an audit, a few weeks ago it was noted that approximately 24,000 refunds were sent to one address in Atlanta.
Yes, I'm aware of this.
How exactly does your algorithm ignore addresses? That doesn't show up? You don't compare addresses? That isn't in the algorithm to determine whether or not we have some fraud going on?
I mean, it's a very important question. And what happened there, I think there was a legally obtained taxpayer identification numbers, and the way in which this individual or entity sought to defraud the government, they were able to orient those in a way that we didn't pick up on it as quickly as we should have. We're learning from that experience, but I agree. Do
you know how they missed it? I mean, this is not just, that's the one big instance. There are 154 different addresses that receive more than 1,000 refunds to those addresses. So you don't take the address in to account at all in the algorithm in determining who to audit?
I think we do, but I have to get back to you to answer the question in why this particular fraud scheme eluded us.
And these folks that put this algorithm together or investigating that, are they the same folks that will put together the ObamaCare reporting system that will be implemented, obviously, for individuals beginning January 1st?
Not exactly, but there will be some overlap between the work that's done in terms of our enforcement of ACA and those that would look at individuals. It depends on the nature of the ACA enforcement, but there will be some overlap. Yes, if it's because the way it works in the IRS is, if we're set up by wage and investment deals with individuals, small businesses deal with small businesses. So I'd have to go back and understand exactly how that Atlanta-based scheme played out and who was involved. But there could be some overlap, yes.
Well, again, it wasn't just Atlanta. There was 153 other addresses, and I want to make sure that we're clear on the IG report. And I have some very specific, a couple regulations that are very detrimental to small businesses. One is a regulation of the IRS that will require businesses with non-audited financial statements to evaluate each and every expense over $100 to determine whether that item must be depreciated. That will kick in on January 1st. And the second one would require that any small business spending more than $100 to repair any building's unit of property subject every single expenditure over $100 up to 9 different tests to determine if the amount spent is an improvement. Now, that is a mouthful. I mean, that's your mouthful, not mine. But as an absolutely ridiculous example, if a small business owner, for example, would replace a toilet in a building at the cost of $400 under this guidance, they will be forced to depreciate that toilet over 39 years for a net deduction of $10 every year. Now, there's a couple very specific regulations coming in January 1st impacting small businesses. Can you explain the rationale behind these?
No, what you described sounds nonsensical. I'd like to look into it.
Okay. Can you provide a written response to the committee? Again, I believe one of these, perhaps both of them, were delayed for a year. And again, there's no specific, I don't believe, statutory authority, which is much different than the Obamacare penalty delay. But this is coming January 1st. I'm hearing this from small businesses, and it's absolute paperwork nightmare. And appreciate a very quick response because they're preparing for that. We're already obviously into the month of July, and they have to start gathering this information prepared for next January 1st.
I appreciate you raising the concern.
I yield back, Mr. Chairman. Thank you.